Hello, welcome 99 family. I'm back with another video. I like to thank you all for watching. If you're new to this channel, on this channel we talk about personal finance, business finance, and professional development. If that interests you, please don't forget to subscribe, like, and comment on our videos. If you have any questions, please feel free to leave them in the comments or email them or put them in the Facebook group. And let's get into the video. So today I'm going to give you guys the secret formula. The secret formula that I actually personally used to get my credit score from a 589 to a 740 within 1 year. So from a 589, which I'll show you guys, you go all the way back to July of last year. I was at a 589 score. And all the way from July, you'll see this steady increase going all the way up until we get to now, May of 2020, and we're at a 740. So I show that to you so that you guys understand the transparency that I give on this channel as far as my credit journey and where I started out at and where I'm at now. If you're wondering what these are on this board behind me, these are your FICO factors that create your FICO score. Being able to reestablish yourself with credit, the number one factor is knowing how to reestablish yourself with credit and understanding your credit. So you have to understand your payment history is 35% of your score. So these numbers over here in the black are the percentage. These the words in the middle are what section of your credit there is, and the numbers over here are how many points that factors into your score. So your payment history is 35% of your score, and that's 297.5 points out of your score. Your amounts owed is 30% of your score, which is 255 points. New credit is 10% of your score, and that is 85 points. Your length of history is 15% of your score at 127.5 points. Your credit mix is 10% of your score at 85 points. Why is this important to know to rebuild your credit? This makes you think as far as what one of these factors are you lacking in, and most importantly, where can you earn the most points back the quickest. So here I may say payment history. Okay, well, what can I do to increase my payment history? I can start paying on time. I can make sure I get my payments paid on time. I can call my credit issuer, ask for some form of forbearance, ask them if they will remove late payments. Anything that will boost my payment history, I can reach out, and that's almost 300 points out of my score. So I'm definitely going to look there if I have any issues with payment history. Now, once you've gotten through your payment history, these can all be done simultaneously, but just for a matter of this video, we're going to kind of go in order. Then you say your amounts owed. This is mainly referring to your credit cards, your credit card utilization. And the sweet spot for your credit card utilization is under 10%. You want it to stay under 10%. And that's because it shows the banks that you don't necessarily need to use your full credit line. It shows responsible use. It shows that you're able to pay it back. So you want to stay in that 10% range. You never want to go over 30%. And there's a great recommendation that you keep at least 1% on the card, just so that it posts it to the credit bureaus and you get that extra payment history every month. The next thing, new credit. This is a big one. As you apply for more and more credit, this makes you look like a risk factor to the banks. So they actually have it built into their systems that if you have a certain amount of inquiries, if you have a certain amount of new accounts, things to that nature, and this will be those inquiries, that it will actually ding your score. You'll lose points, and that's a section with 85 points. The next section that you have to look at is the length of your credit history. And this is one of those that can very easily work against you because you cannot change it by doing anything more than waiting. You can't go back 10 years and open up an account, or go back and open up an account that you closed that was in good standing. You can't go back in time to fix this problem. So you have to just wait and let your current credit age. The last part is credit mix. And this is another one of those where you have to be careful with rebuilding. I don't want to go and buy a car just so I can add an auto loan to my credit mix, because by doing so I just created a large sum of unnecessary debt. So you don't want your credit mix, for your credit mix, you don't want to be going and applying for just random things that you don't need just to say that you have a credit mix. So the secret that you've all been waiting for, and my easy 3-step process, I guess you can say 4-step, 3 active step process to rebuilding your credit. In 3, 2, and 1. The first thing that you want to do is to pay off your debt. This is the first thing that's going to start rebuilding your score quickly. If you have credit cards, revolving credit, lines of credit, any type of revolving credit, make sure that that's the first credit you're paying down to start seeing the most results in your scores. So yes, first, because of payment history, you want to make sure that you pay everything that you have on time. Then any extra money that you have to put towards paying off your debts, the first debts I recommend to pay are your revolving credit. Because again, that's 255 points out of your score. You want to make sure that you're getting those points. Then you want to pay off your installment credit. Start paying that down. Start getting your loans paid off. While you're doing this, you can choose also to be disputing things off of your credit. But the last thing you want to be paying off of your credit is your collections. The second thing that you want to do, you want to open new accounts. Now you may be saying, but didn't you say opening new accounts can negatively affect your score? Then the negative effect of a new account is actually way less of an effect and temporary effect compared to having that extra credit on your report, that extra trade line on your report. Because everything put on your report is called a trade line. You have your primary trade lines and your authorized user trade lines. You need primary trade lines to go for funding. You need good primary trade lines to go for funding. So you want to make sure that you're opening new accounts, because it looks better to a bank if you have 3, 4, 5 other banks that are vouching for you and saying, hey, this person pays on time, this person keeps a low utilization on their card, this person is managing their credit correctly. So you want to open new accounts. This can vary depending on what part in the rebuilding process you start at, what your initial score is. If you start lower, you may need to go for an open sky or something to that effect. You're keeping this card open for a year if you're doing anything with an annual fee, a year, 2 years maybe. So you want to go for the lowest annual fees, because you just need something open and reporting so that you can get to the trade lines that you want. So you can even go and do something like a Finger Hut, a Gettington, a Kohl's Capital One card. If you're up there where you can get approved for an unsecured capital, get a Platinum, get a secured Capital One. Anything that will just report that revolving credit, and a new account that will age to your credit report. And the last step to this 3-step process, and this is the one that I find to be the hardest for myself, and it's merely garden. Let these accounts grow. Let these accounts get history. Let these accounts build. And you will be surprised how quickly your score will rebound when you start paying off your debt, especially those revolving accounts. You open up new accounts and you let them grow. And once you start paying these old accounts off, then you want to get into opening your new accounts, and you want to try to open accounts that have low or no annual fees so that you can keep them and you can always keep your age. You don't have to close them out. You don't want to be closing out accounts unless they have annual fees and you've got to the point where you've been getting accepted for other cards that do not have annual fees, or higher tier cards that are the cards that you wanted. Once you get to that point, then when you opened up, say a open sky or something to that effect, then you can start going back and closing those accounts once you started opening the accounts that you wanted. But make sure that you're patient, you let your accounts grow, most importantly, and most importantly, all of these, the last things that you want to do is research. Don't ever take anyone for face value when it comes to rebuilding your credit. Research the things that people are trying to sell you. Research the products. Research the company that you're going to use if you're going to use a company. Ask that person questions. Make sure that there's someone who's working for you and not just trying to get money out of you. Because it's sad, but it's true in this industry. A lot of people get taken advantage of because they don't do their due diligence. Go and find reputable companies, find products that are going to benefit you, and use those. Like for credit mix, use something like a kickoff or something like that to get an installment loan on your credit. Don't go and take out a loan or pay someone to put some type of trade line on your credit, because then you're put in a situation where you have to keep paying that person to maintain your credit. Try and do this as cheaply as possible, and make sure that you're keeping up with your accounts, you're monitoring them, and building. So with that being said, I want to thank you all for watching again, and I'll see you guys in the next video.